G'day guys, welcome to another episode of the Pumped on Property Show. Now, my favourite piece of content as a data dude each month is definitely our market update. In this one, I go into the nuts and bolts of what's happening with inflation, the RBA, with APRA, what some of the major analysts in Australia are saying about things to come. And what about you, dude?
Man, I like to talk a lot about what I've been experiencing on the front line, talking to clients, talking to investors, talking a bit more about the emotion involved with people's decision making at the moment and how that's impacting the market, which has been really interesting from both of our perspectives.
We're super excited to bring this one to you, and hopefully we can bring something like this more regularly. Enjoy the podcast.
Get stuck in.
Cool. So the first thing I wanted to talk through in today's potty on the market at the moment is just our thoughts. You made a really good point pre-potty, which was like, we don't share enough of what's going on, but we are buying tens of millions of dollars of property every single year, and we've been doing that for a while now. Like, we notice things at the very, very, very front end because like those micro things that are happening in the market become trends over time.
Exactly.
So what have you been noticing, man, from talking to people that are thinking about buying, whether they do it on their own or with the support of someone like us? Like, what's the sentiment like? What's their position looking like? Like, where are people's heads at?
I've been super fortunate. Like, I absolutely love that I get to talk to all of these different people over Australia, even the world sometimes. And I'm noticing a lot of confidence in the market. You know, I think over the last couple of years, people have found themselves in quite fortunate positions. I know a lot haven't, obviously, but, you know, I'm talking to the people that are working a little bit more, that have had some wage increases, that maybe have had a bit of equity growth in their portfolio, and they really want to take advantage of it because they're seeing the markets increase rapidly around Australia, and they want to capitalize on that. They want to get involved. They want to obviously, you know, reap those benefits because they're seeing it in either investment properties that they already own, maybe their own home, or maybe just colleagues, family, friends, whoever might own property in their life.
I think that's so important to acknowledge, bro, that a lot of people have suffered in a heavy way throughout this, but so many of the people that we work with haven't. Like, 80% of people have still maintained employment. Like, a lot of people's wages, because there's a skills shortage, have increased. Like, people's savings in the bank is unprecedented according to CBA. Like, that is the story that the media hasn't been telling. And you're saying you turned on the telly the other day, and so did I, which was a mistake. And it's like, I heard things which I don't think are a true representation of everybody's feeling. They're just talking to a very specific segment of the market.
Yeah, really, really specific segment. And I don't think most people that I'm talking with aren't listening to the news either. They're trying to get their information from more reputable sources, going straight to the source from people like CoreLogic and SQM and Propertyology and maybe these videos as well.
I love it, man.
But like, I'm seeing the confidence, which is great. But on the flip side of that confidence is this fear of missing out, is this urgency that everybody's feeling that they need to have it right now. There's no patience. And I think people need to start shifting their perspective from a short-term outlook on property growth to more of a longer-term outlook. So rather than looking at just the last 12 months and making your decision based on that, backing it up a bit and going, okay, well, what's happened over the last 5 years, 10 years, 15, 20, 50, like really analysing longer-term movements to help make those decisions.
I love that, bro. Like, I remember reading Tony Robbins' Money Master the Game, and he said one of the most important biases that we carry as an investor, and I have this as well, is like a recency bias. Like, thinking that short-term gains will represent the next move in the market, or thinking that markets that haven't done well are going to continue to do that longer term. And it's like a very, very dangerous thing because people for years now have been undervaluing Brisbane, Perth, Adelaide, and overvaluing, I think, Sydney and Melbourne and Canberra. And that's a very, very slippery slope. As Warren Buffett said, like, when the tide dries out, you can see who's really swimming.
Yeah, so I think like that's one thing that we've done really well is looked at those big capital cities, Melbourne, Sydney, Brisbane, Perth, over the last 50 or so years. And looking at what's happening in Sydney and Melbourne right now, looking at that 50-year performance, coupling that with Phil Anderson's 18.6-year real estate cycle, you know, based on the data, it does look like Sydney and Melbourne are very expensive right now. There's no denying that, right?
You know, especially when you compare it to long-term wages and,
Yeah.
you know,
But
it's
then,
insane.
but then you look at Brisbane and Perth, you know, looking at that article from Propertyology, it was amazing to see that Perth has only done 7% over the last 5 years.
Incredible,
on
man.
average.
You know, one of the things that I've been noticing on the buying side of the business is places are selling super fast, first and foremost. Like places that were taking a week to sell are now taking 3 days or a day to sell. The demand has increased significantly, but I've noticed that now that this is the third major lockdown Sydney and Melbourne have gone through, and every single time that happens, we get a short-term spike in Brisbane, and so does every other major regional market in Oz. I think 44,000 people moved out of Sydney and Melbourne, or actually 32,000 people moved out of Sydney and Melbourne in the last year, and 44,000 people from Australia moved to more regional markets or secondary cities. Now, that's significant, but it is very short-lived, and that's a trigger response to, I don't like this, get me the hell out. But at some point now, with 80% vax rates Australia-wide soon, we're going to get back to some sort of normality, and I think it'll start to adjust and settle itself down. And I think people are making very emotional decisions because they're stuck at home, and a whole lot of like cognitive bias, thinking bias stuff is overlaying those decisions, and people have been straight up doing some dumb shit in my mind.
Yeah, and you know, I think the approach that we've implemented is the fact that there's only going to be change in the markets. We've seen it over the last 6 years. It's, you know, two completely different markets in a 12-month period. Like, things change all the time. So you just got to change your approach. You've got to be super patient at the moment. Like, you've just got to be patient. You can't rush in and make those emotional decisions. You know, we're seeing agents list properties super low, get a lot of attention, get a lot of people interested in that property. And then it's like that frenzy, that emotional frenzy. And then, you know, you'll get somebody that'll be willing to pay a crazy price for it because they haven't had the chance to look at the data to understand where true market value lies, and it's driving it up. But there's still plenty of unicorn opportunities that are coming up.
I love that, man. Like, a piece of the information that we were looking at before this was just out of the 15 million people around Australia that don't live in Sydney and Melbourne, at the moment, or a couple of months ago on realestate.com, there was only 17,000 properties for all of those people to live in, like that were available for people to change and upgrade. We are now in a place, according to Simon from Propertyology, that it is just unprecedented territory.
Yeah.
We haven't been here before. It's the lowest vacancy rates. It's the strongest construction boom. It's the strongest internal migration rates that we've seen post-World War II. Like, there's so many things going on at the moment that are going to have a major effect on prices longer term. And it's exciting. And he was suggesting that looking forward, like over the next 5 years, or looking back from the previous few and the next few, that some markets will have done 30 to 50%, and some of them will have looked back, when we look at the history or the data, 70 to 100% growth. And, you know, I've got a sense of which one of those they're going to be, because it's so simple when you reduce it down to what's already gone ballistic in the last 5, and then what has some catch up, but strong fundamentals to support that catch up.
Yeah, it was interesting to see that. And then also one of the updates from HTW where they were talking about the land market. Apparently a lot of developers are getting back in now. They can finally get finance, and they're going to get back in. And we're also looking at where we're at in the 18.6 year real estate cycle, which is typically where the world's tallest buildings start breaking soil.
100%.
And start getting built. So it's funny that, like, you hear Simon, you hear HTW, you look at Phil's stuff, and you start to connect the dots, and you're like, okay, this cycle is really unfolding in front of our eyes right now.
It's interesting that, because Melbourne, Gold Coast, I think Singapore, a bunch of cities in like the Middle East, a bunch of Asian cities in America, are all just broken soil or planning to break soil on the world's tallest. And one of the key indicators for a top is they almost all open at around about the same time, to, unfortunately, like, no demand. But the market has to be in full swing for them to be able to go get finance. And finance is becoming, or has been, extremely easy. Almost all the land supply has been absorbed. And we're noticing on the ground in Brisbane, like, rents have gone up by almost 15% this year. Vacancy rates are so low in certain suburbs. And, You look at everywhere except for Melbourne and Sydney, it seems to be the case right now.
For real. So knowing like where we are in the cycle and seeing all these things happen, what we've noticed is like reading articles from CBA and the Reserve Bank of Australia and APRA and things like that. It seems as though they're starting to step in because they think it's getting a little bit shaky or something like that.
Getting a bit bubbly in some areas.
Yeah.
Look, the first thing I will say is I have no idea where we are in the cycle, but like I'm following guys that have a good history of understanding that stuff. And this is the thing, like anyone that you're listening to that pretends to know what the fuck's going on is just absolutely filled with shit.
Yeah.
That said, there are like patterns within this stuff. Now, one of the patterns we're noticing, and that has happened many times with monetary cycles, is when things start to go, when money becomes extremely easy, when the government starts dropping in that helicopter money, when infrastructure spending is going nuts, when governments start buying long-term bonds, generally what is happening is the government or the reserve banks around the world are putting petrol on the fire to restoke a dead economy or a flat economy or really bad sentiment that's causing markets to go backwards. Now, what happens as a result of that is property prices, certain other prices, like maybe crypto is a good example of that at the moment, maybe some other stock markets around the world go ballistic. And then the government gets to a point where it's like, there's potentially some inflation happening in many parts of the world right now, and asset prices are rising so quickly that they have to intervene, because humans, I don't think, because of our greed and our ego, can control themselves. And so we'll run a market every single time almost into the ground. Like that's what history has shown us. The greed will go to a point where it's unsustainable. Monetary policy will step in and we'll have a recession or a depression.
Yeah.
So what's happening on the ground right now is they're realizing that inflation is a real thing, but they don't think the economy's at a state where it can stand on its own feet, and they can't start raising interest rates yet. So the way they're putting the handbrake on is APRA is stepping in and going, this is what you could borrow money at, 2%, and we're just going to give it about a 2.5% to 3% buffer above that, so that even though you're paying at 2% or 3% right now, we're working out your servicing limit well above that to give us it's a safe buffer. That means that most people's borrowing capacity decreases.
Yeah.
The other thing that they're putting back in place that they removed last year was this income, savings, debt, expenses checking, and making sure it's diligent. Because for the first time in years, what they're starting to notice is some irresponsible lending starting to step back in, and people's debt to income ratios are just a bit out of whack, especially in Sydney and Melbourne. Like they're actually ridiculously out of whack.
Well, like mortgage brokers are amazing assets to people, but at the same time, they're just normal people.
Their
and
business
they want to
model
make
is
money
built around that.
Yeah, they also want to make money as well, right? So, like, people can submit like false information to these mortgage brokers to get themselves over a line, and maybe that's where these people are stepping in. And, you know, based off that, it's probably going to impact markets where property prices are a fair bit higher.
100%, man.
Because it's going to be a lot harder for you to service that debt. And then, you know, markets like, say, Brisbane, Perth or Adelaide that are still a little bit more affordable, it still might not have as big of an impact on those markets, right?
Fully, bro. Like,
at this point.
what would be amazing if Australian government went, Sydney and Melbourne are ridiculous right now in relation to property prices to income.
Yeah.
And they went, cool, like we're just going to do a postcode overlay to go, this is getting a bit like intense right now. Let's just, and then let some of the markets like, but the same policy is going to apply to Perth, which is cheaper to buy than it was 14 years ago. That's only grown by what you said, 7% in the last 5 years. So this is the cool thing about this stuff. I think what's going to happen is people are going to go back to some form of normality over the next year. They're going to, as my father-in-law said to me recently, start traveling and enjoying themselves and partying. They're going to start spending their money that they've saved, which they already are. And they're going to forget that property is the be-all and end-all, which is what it is now. And I think with these APRA changes, it's going to put a bit of a wet blanket on it. It may not.
It may not.
It may not, but that's what the government's hoping for by starting to step in with some of this stuff. And historically, it's worked very, very well as a handbrake.
Yeah, and the news and some of like the big talkers around the economy and property and things like that are probably going to step in and, you know, talk about this. And people
100%.
are going to be like, oh, okay, this is going to impact the property market. And in all honesty, it wouldn't be a bad thing if things slowed down.
Best thing.
Yeah.
You know, I'm not going to lie, like it feels really nice for people to make 10 or 20% in a year. Michael Matusik's talked about this, and we've talked about it before. Like, there's no such thing as like a linear run in property. I think there's just rampant speculation, which is like really steep steps, nothingness, really steep steps. And he said that like 4 or 5 years ago through one of his emails, that we're going to see these increasingly short bursts when credit's easy and confidence is high of growth, step, wages increase, growth, step. And it's going to become more and more chunky like that versus previously where you look at some of the 50-year data and it's like, well, Melbourne just had this incredible run of 13 years of 5 to 7% per annum and everyone ended up doubling their stuff. It's like, well, you know,
times are changing.
Times are changing because you get on social and it's like, this guy's like, the market's booming, you've got to get in
quick,
now.
Right? Like you can get that information a lot faster than you used to be able to.
Or hey, like APRA stepped in, things aren't looking good. I've heard this in America. I might just pause for a moment.
Yeah.
And, you know, that's making a pullback much quicker as well.
But it was interesting to say that they're going to hold the cash rate where it is right now, but they're just going to step in and increase the serviceability calculator by 0.5%. You know, they're still saying that they're going to wait until they get to that 2 to 3% inflationary period until they start increasing that. And what did Simon say? I think he said that it was like we're about 3% lower in terms of the interest rate right now compared to 2019.
That's a really important point, man. Like I laugh about this sometimes because I think my first loan was like 7.8% back in 2011. I thought that was a good rate. Like, you know, and then when they dropped to 5%, I'm like, fixed everything.
Yeah.
And then like by the time my fixed terms had ended, I was like, the rates were at 3.5%. I'm like, lessons learned, like, you know what I mean? But this is the cycle, right? Like this is what I think everyone needs to understand, that the way that this works is based on sentiment. Sentiment's good right now. When sentiment's good and money lending's easy, things blow up. When sentiment's bad and money lending's really tight, it's when people go bankrupt. That's when bad things happen. And right now in some markets, there would be some people that are completely overexposed. And then right now in some markets, there's some of the lowest risk takers in human history with so much cash in the bank. Like I talked to these boys yesterday, $1 million in the bank, just sold a really profitable cafe for whatever they've sold it for. Tiny bit of debt on their own homes in Sydney. Like there's so many people we speak to every week that are like balling, and then so many people that just have an 80 to 100 grand a year job that are doing really, really well with their savings, that have been sitting on savings for 7 years and that are now starting to step in. And it's exciting. Like we've got to remember there's so much money on the sidelines. Phil Anderson says we're not even close to being all in yet from a banking or a personal perspective. And, you know, that makes me feel better. Yeah,
you look at the people talking about cryptos and NFTs and things at the moment, and one thing that generally happens around this stage in the cycle, according to Phil, is that something happens that allows people to make a lot of money really quickly.
Which has got to be crypto, right? Like,
yeah, it seems to be the case, but you know, you talk to the pros and they still think that we are closer to the floor than we are the ceiling of these types of assets. So there's still a lot of growth to come, according to some pretty smart people.
I wonder what a crypto pro is. Like someone with six years experience in the markets. Like what is a crypto pro? Like,
well, how long has it been around for now? 8 years or something like that. Seasoned vet, 8 years.
The seasoned vet, 8 years is like, what other markets were they looking at before that? How many hundreds of years of history?
Oh,
I love it, man. Like all of my mates that love gambling are just
really
punting away at the moment. And I love it. Like I just fully regret not getting in. Like
I do
everybody
too.
else does.
Like, yeah, I remember getting that message. I think it was at like 4.5K Aussie, and we're like, get in now, like go for it, boys. And we all both just made excuses why not to.
Yeah,
just
I was
scared.
I just bitched out and I missed it.
But look, you know, you got to choose your lane as well. And to me, like I love property. I don't vibe with the crypto stuff, and that's my personal preference. And that's cool.
Yeah, I just wasn't ready to. Like I'm saying, like a lot of people missed it, and that's cool. But you know, I'm just staying in my little lane, which is like nice and easy for me. You know, is there anything else that we wanted to talk about? Like, I think one thing that Simon said, which I thought was super interesting, Simon Priestley, that is a whole lot of credit has been lent to developers.
Yeah.
And while that supply hasn't come through yet, there is a huge amount of stuff that's been built in the last 2 years that is under the radar, or a huge amount of developments, greenfield sites that have been rubber stamped. And he thinks many markets could face not undersupply issues, but oversupply issues by the end of 2022, 2023. That's off the back of Australians are so used to, for 100 years, just constant and beautiful overseas migration. And the fact that we're not having enough babies, you know, internally means that like those 300,000 people that come in fill that supply. But you and I both saw in the ABS data that every time there's a major event, boom, like one of the levers they pull, open it up. Back in 2007, 8, they let almost 450, 400,000 people in a year, and just, that's a way. Like if everyone's paying to play to come here, plus they've got to have a place to stay and create a job or a business to support themselves, like that can spark an economy back alive as well.
Yeah, and I was reading one of Matusic's update talking about the expected like overseas migration over the next few years. Like obviously 2020 was a huge negative year. 2021 is pretty flat, nothing really happening. But then slowly but surely 2022, not even meant to be anything like what the past was. I believe it's going to be below 100,000. But then moving into 2023, 2024, that's when we're going to get back up to those, you know, couple of 100,000 people at least per year. And that's really going to help, because one of the big factors in Australia at the moment is that undersupply of quality tradespeople.
100%.
Because of these vacancy rates. And I think Simon was talking about this as well. These vacancy rates being so lean, being so low, people don't want to move to these regional markets to fill the jobs, because they can't put a roof over their head. You know, oh yeah, let's go. I'll go and get a job for 150 grand a year, but I'll just camp in my tent.
It's not happening, especially with people with families and partners.
Yeah, so we need more supply. We need more demand. I mean, we need more supply coming to the market. So hopefully that helps fill that gap. But then we'll open the floodgates, see a whole bunch of new people come into Australia, and maybe move into a bit more of an equilibrium.
I love that, man. Like, one of the things that I love about what we do is we work with different people. Now, I've spoken to 3 people in the last week. One of those people owns 2 really profitable cafes in Sydney. One of which they've just sold, and they can't find labour for the cafes. Then I've got a farmer that we're working with in South Australia at the moment that cannot find people to pick his fruit to sell the Australian and Chinese market. I also talked to Ray, one of our clients that runs a commercial cleaning business. His story is so inspiring. Like, he was working, cleaning homes and offices himself 80 to 100 hours a week. Then, like, first generation immigrant just trying to make something. Now he's got 250 employees. He's got a whole incredible portfolio of property. He's looking to buy a $4 million waterfront unit in Pyrmont overlooking the Harbour Bridge now. He's just bought himself a commercial office, and he said, Ben, I've got 250 people. For the first time in my career, all of the other commercial companies in Sydney are asking him if he's got people that can clean their jobs for them, and they'll just give them their entire profit, because they can't find staff. Like, the job
still needs to be done.
And then we know so many builders, man, that cannot get product, that cannot find people. This is a beautiful opportunity for the world to see not just how stable Australia's been through this crazy period, if you could say that, but how much opportunity it'll become the land of opportunity again. Like, and I'm so excited about that. I'm so excited to have all those people that can come in, start here, and make their Australian dream a reality.
For sure. You know, we're pretty optimistic about the future, and I'm very excited about the future here. And, you know, still doing these market updates, one of my favourite things to do in the month, where we go real deep into these different channels, these different analysts and spokespeople around the economy. And it just, like, I like to, because you see a lot of negativity out there still. You see a lot of, like, even when I turned on the news or when I turned on the radio, it's like, man, you still throwing that stuff out there? Like, come on. You know, throw enough shit, it will stick. But, like, I like to just talk about, like, the other side of things and, you know, try and get a little bit deeper into these ideas, because there's a lot of opportunity out there. There's a lot of potential for Australia, and I think you just got to kind of look outside the box, as opposed to, like, what has worked recently is, you know, Sydney and Melbourne in terms of property, but it's time to start, you know, expanding your horizons and looking into other markets.
I say this to you all the time. and anyone else that will listen, like off camera. And it's like, I truly believe that Australia is America 50 years ago.
Bro, I love it.
And this is the American dream being lived. Like, you've got access to great schools for nothing. You can get supplemented university in TAFE. You can get free, like, healthcare if you want it. You can choose to just cruise, or you can choose to, like, absolutely blow it up. And there's opportunity. And lucky enough, because of all this immigration, like, we still have property markets where at the moment there's more demand than there is supply, which is causing those prices to go up. It's so exciting.
I'm going to asterisk it. In 10 years, we're going to come back to this and be like, remember that?
The Australian dream. Get on
The
board.
Australian dream. Get on board.
In 10 years, we most likely be in a deep recession, and people be like, what dream are you talking about, man?
Seriously. No, I love it, man. Have we got anything else written on that list there?
I think they're the big
I
rocks,
think we've
man.
hit the big ones. Appreciate it, man.
Yeah, you too. Really nice chat.
Sweaty. So sweaty. Oh, that's good.